Crude oil, daily forecast, June 4th, fxempire.com. You can see the crude oil markets in the light sweet crude variety had a positive showing on Monday, which is a little bit ironic if you think about it, considering that the ISM numbers came out of the United States in a contracting attitude, 49.5 if memory serves me correctly. Either way, it was below the contraction point. So it shows the economy slowing down. Now, interestingly enough, oil went higher, which makes no sense at first blush because it means demand is going to be lower if industrial sectors are starting to slow down. But this was based upon what's going on at the Federal Reserve and probably not much more. It probably has almost nothing to do with oil, quite frankly. And that's why it's so difficult to trade this market right now. If the economy is slowing down or at least not growing in the United States well enough, then the Federal Reserve will not end or taper off of their quantitative easing. If that's the case, it should, at least in theory, drive the value of the US dollar down. That's exactly what happened during the session on Monday. The dollar got sold off rather hard, quite frankly. Probably a little overdone, but nonetheless, that dollar being sold off rose the value or brought the value of assets higher, um, as it just simply takes more dollars to buy them. You saw this across the commodity sector, and as a result, we get a nice pop in the light sweet crude market. Problem we see is that there's a lot of noise right here about 94. Whether we can get above there or not is a completely different story. We're more than likely going to consolidate, and on top of that, this market is so choppy right now. We're very hesitant to be involved, and in fact, believe this is probably one of the more dangerous ones to be involved with at the moment. As you can see, it's just back and forth nonstop. On the other hand, in the Brent market, it's a little clearer. We did get a nice move higher, but you'll notice that the 102.50 level stopped the market like a brick wall. We think, and right now it's really only speculation, we wish we could give you a little bit more certainty in this, but we think that this area here between 102.50 and 100 is going to serve as a little bit of a consolidation area. If not, your consolidation area will look a little bit more like this. We have a hard time believing that we're going to go above 105 unless there's some kind of meltdown in the dollar. When we're in a situation where most of the world's economies are weak or anemic at best, that being said, that means that the supply just simply is, or the demand is simply not going to be strong enough for the supply. So this is all based around quantitative easing now, the Federal Reserve again. That being the case, if you want to trade oil, you better keep an eye on the Fed.